Nigeria's President Muhammadu Buhari will be delivering a budget speech and presenting the appropriation bill of 16.4 trillion naira for the 2022 fiscal year before a joint session of Parliament to finance a deficit of 6.25 trillion naira. The government also plans fresh borrowings. Well, let's discuss the budget highlights with Kyari Bukar, former chairman of the Nigeria Economic Summit Group, Andrew Nevin, chief economist at PWC Nigeria, and Bismarck Rewane, CEO of Financial Derivatives Company. Thank you, gentlemen. It's a pleasure to have you on the show today. Big day for the government, but of course we know what the numbers are. We know that we're familiar with some of the highlights of this budget, but I'd like to just get your initial thoughts, especially about the size of this budget, over 16 trillion naira. Now, over the years, we've talked about the size of how inadequate the size of the Nigerian budget is for the country in terms of what the country needs, especially from an infrastructure perspective. So, Bismarck, I'd like you to go first. Just your initial thoughts on this budget, the size and the highlights that I know that you have seen.
Yeah, I think that it's quite a welcome development directionally. The size is not, compared to the size of the GDP, it's nothing. And you need to take into consideration, this is just the federal government budget. You have to take all the state budgets put together with the federal government to know exactly how much government expenditure is going to be as a percentage of GDP. Now, having said that, when there's a recession, when there's a slowdown, you need to spend what we call counter-cyclical Keynesian model. You need to spend more than you have to actually jumpstart the economy and keep it going. As long as you have the monetary policy tools to calm the overheating that will happen as a result of this. So one, we have to take that. But if you discount the amount of the increase by the rate of inflation and the rate of exchange rate depreciation, the budget has not actually increased because there is a 17% increase in expenditure, but there's also a 17% increase in inflation. Therefore, if you discount for inflation, the actual growth of the budget in naira terms is zero. Then if you take the exchange rate depreciation into consideration, it's actually in dollar terms, the exchange rate, the budget growth is actually negative. And then you have to bear in mind that you are going to be borrowing as well. So you have to now look at what the productivity gains will be. So first, let me summarize by saying, one, it's a good move in terms of its growth. Two, the growth after discounting for inflation and exchange rate is actually negative in dollar terms. Thirdly, it is necessary to do that and ensure that there are the monetary policy tools to make sure that the economy is not overheated. I think that's my first comment on it.
Okay, let me move on to you. Looking at this budget, how will you read? What is your reading of this budget? What are you happy to see in terms of the highlights and perhaps your concerns? Briefly, please.
What I see is actually the more of the deficit financing, which we have actually been doing for quite a while now. Deficit financing itself is not that bad. However, one looks at the total deficit size, which is about 6 or a little over 6, about 6.5 trillion, whereas one looks at the capital spending or allocation for capital expenditure, still at 3.5 or 3.6 number. That basically means that the borrowing is not all going into capital, which would have actually been a far better story to tell in the sense that we are borrowing to invest rather than we are borrowing to maybe partially invest, but the overall investment size is far smaller for the growth. However, as BJ mentioned, spending out of a recession is one of those economic models that have been espoused for, at least over 100 years these days. But what we have seen is that we do not seem to have the discipline and focus in execution. And those are some of the other critical elements. Of course, there are 36 plus the FCT, where a lot can be said of how their budgets are. Typically, states spend more in terms of percentage on capital expenditure than the federal. So I think the attention should still be on the center. Thank you.
All right, Andrew, let's hear your thoughts. But before, just a quick note to our viewers that President Muhammadu Buhari is already on the floor of the National Assembly and will be presenting the budget to lawmakers, of course, for them to go through all line items and, of course, decide on whether or not this is a budget that they will approve. So, of course, we'll be keeping you updated on those proceedings. But in the meantime, Andrew, just your thoughts on this budget. I mean, yesterday at the Federal Executive Council meeting, the Minister of Finance did talk about, she talked about how the federal government does have a revenue problem, but of course she did allay fears of those who were concerned about Nigeria's debt to GDP. She stressed that it's still the lowest in the region. She made comparisons to other countries in the region, and she said that, of course, the government still needs to borrow. I guess that's a key point here, the fact that there will be a lot of borrowings happening, over 6 trillion for the 2022 fiscal year. Your thoughts?
Well, I think our view's been consistent over the years. I mean, the country does not have a debt problem. I think the Honorable Minister is exactly right on that. What we have right now is a growth problem. And if we continue to grow at 1.5% or 2% or even 3%, which is basically the population growth, headline GDP, we're going to continue to have these problems. We need growth of 6 to 8%. And I think in terms of this budget, I mean, as Bismarck and Dr. Kyari have said, I mean, the investment in infrastructure, I applaud the government has made an effort in it. I think it's about 3 trillion in this budget, but the total amount of investment we need to grow at 6 to 8% is about 50 trillion naira. And I think now people recognize the private sector has to come to the party. So we're not growing because we're not getting enough in private sector investment. So the question that I would have is, what's the budget doing about some of those issues? And some of the issues that come out of that is a misallocation of resources. We've always been in a camp that subsidizing Ajacuza steel for no steel production is not the right use of resources. Subsidizing the refineries for no oil, no refined product is not the right use of resources. And I think the final thing I'll say at this point is just there hasn't really been an attempt to simplify government. I mean, His Excellency the President has assented to the Orshay report. We know from all our clients that the complexity of dealing with all of the MDAs imposes huge costs. They're all also pursuing revenue targets, and it's counterproductive. So I think while we don't have a debt problem, unless we solve some of these more fundamental structural issues, we're not going to grow fast enough, and then eventually we are going to have a debt problem.
Now, Bismarck, let me come back to you. Away from the issue of debt, let's talk about what we expect, what this budget is actually going to do in terms of the trickle-down effect. Analysts, economists that I've spoken to in the last couple of weeks in a run-up to this budget presentation have talked about the fact that the country needs to boost productivity. We need to address issues in the manufacturing sector. Of course, for the manufacturing sector will be one key issue there will be FX. We need to address issues in the agricultural sector, insecurity, boosting the value chain, putting more focus on processing. Talk to us about how do we boost growth at this point? Looking at the numbers, obviously, the government is big on infrastructure. They want to finish up existing projects. Many of the monies are tied to a project tied, I suppose, which is a good thing. But in terms of how we boost overall growth, what are your thoughts? What are those immediate steps that you foresee happening?
Well, I think, first of all, we have to understand conceptually what this is about. If you have a Keynesian model of stimulating growth by having a counter-cyclical spending pattern, which means that you intend to increase activity and benefit from a multiplier. There are 2 multipliers. There's a government multiplier and there's an investment multiplier. The investment multiplier is of no use if investments do not come in. Therefore, what is the budget? The budget as a tool of management is different from the budget as an expenditure plan. Now, as a tool of management, we want to ask, what will the impact? 12 months from today, would we have more investment, both domestic and international? Are we going to have sweating those assets that we are completing? Because there's what we call stranded investment and ghost investments. So if a bridge is built and nobody uses it, it has no productivity impact at all. If a house is built and nobody stays in it, it has no impact whatsoever. So what are the things that you are going to do that will encourage domestic investment and domestic savings? Now it now flips over to the monetary policy side, because the execution is not about people, it's about policies and the belief, what it is, that the people believe in it. Now, so you talked about foreign exchange, no rationing. The exchange rate has to be, to a large extent, market-driven. Then the interest rates have to be in line and higher than or equal to or closer to the inflation rate. When all of those things happen, then investment, which is a function of confidence, right? People will begin to invest and alter their position in spite of the fact that you are approaching a political election. So when those things happen, then you begin to see the impact. So I don't want us to delve on the fact that government said this and government said that. It is what they are doing, what the government is doing, the pronouncements that are being made, and the belief of the people who mentally will adjust to say we are convinced that the monetary conditions are consistent with the monetary policy and that the fiscal conditions are also consistent with the fiscal policy. At that point, people will make up their mind and invest.
Kyari, let me bring you in here. In addition to driving investments into the economy, foreign direct investment, domestic savings, there are also there's also the issue of structural reforms, taking those hard decisions. Some of which IMF, likes of the IMF, World Bank, even the federal government itself has said, especially on the issue of a subsidy. What are your thoughts in terms of our reforms, fiscal reforms? What fiscal reforms do we need to continue to focus on, or should we take more seriously to aid economic growth?
Yes, any kind of consumption-related subsidy, generally speaking, is not sustainable, and we are seeing the stark reality of that with the oil prices going up, and meanwhile refined petroleum products are being further subsidized, and that basically is quite an inefficient intervention, if you will, into the economy. So that aspect we need to bite the bullet. We need to ensure that aspect is addressed. And if there is going to be any kind of subsidy, it should be production related, meaning that people that produce and export can be given either tax breaks or whatever sorts of incentives, rather than subsidy being loaded up on consumption, because we are a highly import dependent economy. To reverse that, you need to do some very difficult things, and I believe that policymakers can go in and make the population aware that there are some hard choices that we must make as a country to ensure that. The other aspect of the investments is that the policy pronouncement need to show that Nigeria is investor friendly. So far, we haven't made those cases. Yeah, there is some improvements in ease of doing business, et cetera, but one of the other things I would also really like to point out is that we do have a lot of dead assets, somewhere in the order of, I believe, $500 billion or $600 billion. Now, if half of that could be offloaded at some valuation, I think there would be enough capital to close that gap that Dr. Nevin mentioned, which is that we will then be able to propel the growth rate into that high single digit or low double digit. And Nigeria must be in that trend for a considerable period of time to see it trickle down into the lives of the average citizen.
And Andrew, let me bring you in here. Now, the main driver of the recovery has been the services sector. If we look at GDP data between Q1 and Q2, we saw the services sector recovering from 0.39% in a drop in Q1 to 9.27% in Q2. However, we did see industrial activity declining by 1.23% in Q2, down from 0.94% in Q1. So, I mean, back to that conversation about productivity, ensuring that we are strengthening businesses or making the environment better for businesses, because if businesses are stronger, they're able to hire more people. If they hire more people, those people are able to pay more taxes, and the government can have higher revenue from that. So your thoughts on those issues that we still need to tackle, how the government can help boost, support businesses. Excuse me, I know that the government is focusing on SMEs, but your thoughts on what you've seen so far, and perhaps at this point, do we need a different approach?
Well, I think the point about dead assets, I mean, we were the ones that put the paper out, and this is a wealthy country. We're rich in assets. It's just the assets are not producing a return. So that's kind of the number one policy. Within that, we've sort of focused on real estate, particularly residential real estate. But at a more general level, I mean, we put out the concept that Nigeria's biggest export is Nigerian grains because of the diaspora remittances. But we can export Nigerian grains now from Nigeria without people leaving the country, and particularly with COVID. So we're seeing more and more of that. So, the strategy we're advocating for the nation is let's double down on the highest value added product that we have, which is grains, right? So what would the implications be? Well, the implications would be that we would take our scarce resources and put them into Nigerians, young people, education and health, essentially, on that, because they're earning a massive return for the country. For us, that's a better strategy, for example, than focusing on entering low-end manufacturing like South Korea. But the problem we have, I mean, I think Dr. Kyari said it right, is we just haven't made the hard decisions. So we continue the subsidies that is just unsustainable. Of course, someone may argue, well, some of that subsidy gets to the bottom of the pyramid. We would simply say, well, particularly now with the introduction of the e-naira very imminently, it's very easy for the government to send cash directly to the bottom of the pyramid. If that was really the desire of the program, it would be much less expensive than the subsidy program we have, and use its resources really to support Nigerian people. But again, we just haven't addressed some of the fundamental issues in terms of the complexity of doing business. And there are too many businesses. I know so many businesses and business people, both women and men, who are trying to do something. And what they find is the complexity of dealing with all these multiple agencies, that even when they're in they're small or medium sized, the demands on them in terms of financial contributions at this point. I mean, we say we're a low tax regime, but really, if you add up all of the charges that go into many businesses, we're a high tax regime. People might have seen a few weeks ago, there was an article about the fact we're not exporting high value agricultural products by air because it's just simply too expensive versus countries like Kenya and Ghana. So I think we have some hard decisions to make. I said at the beginning of COVID, I thought we were coming up to a point where we'd have to make those hard decisions. We've gone 18 months now. We haven't quite made them, but I am optimistic sometime in the next sort of 6 to 24 months that we'll make them. They'll go in the right direction. But that said, I mean, there's so many positives I see in the country. One is this issue of the debt assets being on the table. Two, I think that the Honorable Minister of Finance, for example, the Finance Bill Act every year. I mean, that's a real improvement. There's a lot of PEBEC.
Andrew, I'm afraid I'm going to have to interrupt you at this point, Andrew. Just hold that thought for us, Bismarck. I mean, looking at this budget, what are your hopes in terms of what we can hold on to in terms of what this budget can do for Nigerians, what this budget can achieve? Like I mentioned earlier, the government is big on finishing ongoing projects and obviously big on infrastructure. But when you look across the budget, what is it that gives you hope? What is a bright spot for you?
Three things for me. One, the size of the budget because of its magnitude and the direction. Two, is the fact that it's targeted at achieving the desired objective of as a tool of management. And three is that it sends a signal because we are borrowing, the discipline that comes to a government because of creditor requirements will force proper governance and disclosure. And finally, the fact that monetary policy, we are beginning to see that the I&E window rate is beginning to depreciate while the power market is beginning to appreciate. So we are beginning to see some convergence, and gradually and reluctantly, government is beginning to accept that we are not running a Robinson Crusoe economy, but that we are going to be running an open economy, and therefore the efficiencies that emanate from that mental adjustment will be of great benefit to the people of Nigeria.
Well, that sounds a little encouraging. Kyari, your same question to you. I mean, what bright spot do you see in this budget that you're holding on to?
One of the statements made is basically, I think it's the Minister of Finance that mentioned that most of the capital expenditure side of the budget is going to be directed at unfinished projects, meaning completion of unfinished projects. We in Nigeria are notorious for starting something and never finishing them. And by the time you come around to it, it had become 3 times more expensive, and with the delayed effects, the economic benefit that had been espoused before would not come to pass. So essentially, with that, if it is well-disciplined execution of that can be actually quite a commendable aspect of the budget that I see. There are some others that BJ had mentioned, but I think overall, I like what is being put forward, at least on the capital side, because we need to complete some of the projects that we've started as a nation. And I suppose that discipline can make us continue year in, year out with those sorts of posture. Thank you.
Andrew, over to you. 2 minutes. Just your thoughts. Bright spots for you in the budget?
I think this issue that Dr. Kyari raised around finishing projects that have started is very important. I know it's a big focus of the government in the last 2 years, so that's fantastic. I think that the discipline of just bringing out the budget at this point in time and the Annual Finance Act is really encouraging. I think to Bismarck's point, I think certainly if I compare to a decade or even 6-7 years ago being in the country, the scrutiny by the public, by NGOs, civil society, other politicians on what's being done is much higher. So the level of accountability, I think, has gone up. Of course, there being a number of reforms like IPSIS and TSA, for example. So we're moving in the right direction. And I think just sometimes as an outsider, but who's lived here for a while, I think sometimes the country is a little hard on itself and sort of its trajectory. Many of these institutions in other jurisdictions that we might respect took hundreds of years to build. And I've watched it in my decade and a bit in Nigeria happening, very fast. So that gives me a lot of confidence. And I think the budget process is much better than it was, 3 or 4 years ago. Under this administration now, they've really addressed it. So I'm heartened by it. And I think also the recognition that even if the federal government spends 3 trillion naira in capital spending, they do recognize that the vast majority, over 90% of the capital required, needs to come from the private sector. So that was a realization that really wasn't in the consciousness kind of 5 years ago. So overall, I'm optimistic. I think we're making progress.